What's up, guys, and welcome to part 2 of our pattern recognition series. On part 1, we definitely looked at the bullish variations, or in whichever case, bullish M's. There are going to be 5 of them. If you haven't already, check out that video. It's going to be, I believe, in the link in the bio. If not, it's probably a few videos before this one. We are identifying the importance of market structure, as well as, implementing these patterns, as well as identifying these patterns within the markets, or I should say live markets. There are 3 bearish variations of these W's, right? Obviously, they're going to be W's instead of M's, which is, in whichever case, it very much makes sense to look at the market like this, because it's literally, in many cases, honestly, in many cases, it's literally just an inverted M. If you haven't already, hit that like button, subscribe to the channel, ring that post notification bell, stay updated on all our videos, because we do aim to post consistently. Without further ado, let's very much get started. As you can see, price establishes a high, low, lower high, lower low, lower high, continuing towards a lower low. It is important to obviously not only understand the market structure being presented, but of course understand that it's very much going to be accompanied with a trend line. This is going to be the bearish M. Very much understanding what's happening towards, the left of really both of these protected highs. Very much internal risk liquidity being taken out, very much internal risk liquidity being taken out. These are all individual ranges, so you can very much take advantage, or it is very much possible to take advantage of pretty much any range, of course, but most definitely these two that are after its very first significant or protected high. As you can see, we definitely have next a natural W, right? This is going to be the bearish variation of the natural M, right? As you can see, if you don't remember, it's going to look the same. It's literally just mitigation. However, we have a high, low, lower high, not a lower low, maybe a equal high, equal low, and then we have an equal high being established as well, right? So with this being said, again, do not be afraid if price decides to take out external range liquidity in this case altogether. It's just very much, it's a thing, it's possible, it can happen. However, what we are obviously looking for or looking to see is this mitigation of this previous printed high, right? Understand that price very much printed a strong high, weak low, and rallied high for a pretty significant inducement, right? This low is needing to be rated. If not rated, it's needing to be mitigated. There's any kind of liquidity pull above this weak high, right? Because this high didn't take out the high before. So price continued, failed, and continued higher, took out internal liquidity or mitigated any kind of liquidity towards the left and continued towards the lows. It's pretty simple. Price establishes a high, low, lower high, equal high, continuing towards the lows. Fairly simple. As you can see on this bullish W, price very much establishes a high, a low, a weak high, a higher low, or in whichever case, a equal low. It really just depends, of course, because of course you can have a liquidity raid, you can have a mitigation, you can even have a set of equal lows to be targeted for later, as long as it's understood that, before anything, price needs to take out internal risk liquidity. Before anything, price needs to obviously carry out the overall, price movement towards, in whichever case, the highs, but as well as the lows, right? So in this case, price establishes a lower high towards the lower low. It is important to understand that, again, these patterns, or I should say these significant patterns within this pattern recognition series, they are always accompanied by a trend line, right? So, by the time you see these wicks, by the time you see maybe a bit of stagnant behavior towards the highs, understand that there's a pretty possible chance that price may be reacting or responding towards a potential trend line. Draw your trend line, see what happens, see what you see what your eyes kind of identify your setup or price action, as well as market structure as identify. Is it a bearish M, or I'm sorry, is it a bearish W? Is it a bearish natural W? Is it a bullish W? These are all going to be bearish variations, different patterns to very much be aware of within the markets. Moving on to our live market data, it is important to understand not only, of course, the price action, but definitely the market structure being presented. We have a structural high or a strong high, weak low, or in whichever case, a high low being presented. Price retests or rallies up, taking out internal range liquidity towards the left, establishing an inducement or a weak high. Right? Did this high take out the high towards the left? Of course not. It makes it weak. Price very much continues towards the lows, failing to break any kind of lows towards the left, continuing towards the highs. In whichever case, establishing a protected low, as well as, continuing towards in whichever case, internal range liquidity, in order to, of course, fulfill liquidity towards the left, as well as continue towards the lows, right? So, of course, you can say that price establishes high, low, lower high, higher low, yet another lower high to establish its overall lower low. This is just understanding market structure as well as identifying and if you haven't already guessed it, the bullish W. Okay, this one's going to be a little bit tough to kind of identify only because it just looks so clustered and a lot. However, it is very much there. It is very much apparent to see, right? As you can see, price establishes a strong high, weak low kind of situation, or maybe a high, low, retested, leaving in whichever case, an inducement or a weak high. Did this high take out the high before that? No, of course not. So this ends up being a weak high or a lower high, continuing towards the lows to establish a lower low. Pretty simple. In this case, price is definitely breaking structure. Price is definitely leaving lower highs, or in whichever case, a pretty significant trend line to kind of react off of, or potentially react off of, right? As well as, continuing to identify this as a lower high, continuing towards the lows. And of course, of course, you can definitely take your partials or your profit at the next low. However, it is very much important to understand that when these patterns are very much formed, they only form to obviously give your ultimate or the manipulative move altogether, right? The absolute entirety of the actual move that's being built as this liquidity is, building upon itself, right? As you see, as you can tell, we have a pool of liquidity that it has been drawn to, right? So as you understand that, this bearish M very much played out itself. Yes, we have, we have external range liquidity towards the left is what I'm saying. We have slanted lows, which stretches out. We also have a 3 candle or equal lows, which honestly below that, we have an unmitigated wick. That is how precise your targets can actually be, with a bit of practice, of course, understanding and being able to identify these, different patterns within the market. Last but definitely not least, we have a natural W. So this is going to be a bit clustered. I can very much zoom in, but I feel like that would just confuse a lot of people. So instead, I'm just going to work with the price action as well as market structure being presented. As you can see, we have a strong high, weak low. Price enters a pretty steep amount of consolidation. We didn't necessarily break this overall high until maybe this manipulation towards the highs, as well as break these equal lows until this manipulation towards the lows, right? So how would you know this move would be, obviously presenting itself? Well, we have a high, low. We have, in whichever case, we definitely have a high being presented or a lower high in this case. Price continues towards the lows, fails to break the low towards the left. In whichever case, rallying towards the highs, manipulating any kind of buy side liquidity as well as sell side liquidity. In that case, we definitely are presented with our natural W, whether that be right here or right here. It's very much apparent. This gives price all right to continue towards the lows. As you can see, and really if we, zoom in, you can see how price definitely presented a setup opportunity for this overall opportunity towards the downside in this mitigation towards the left, as well as, you can definitely take this rejection block if you really, if you really just feel like you are not so sure about this, natural M's as well as W's, of course. They're kind of a little bit harder to identify because you're really kind of trusting that, your low or your high will definitely hold, or your point of interest won't just be ran through. But again, it's important to know that with this comes, obviously trend lines. Like trend lines, if anything, add it to your confluence of events, and you will very much understand that trend lines very much play a key role, or I should say, play a key role in identifying, market structure, right? As well as price action, but more so market structure. Price price very much, again, in this case, mitigates the high towards the left. In whichever case, establishing what? A pretty significant natural W. Obviously, we can definitely move this right here, but it's important to understand the manipulation towards or out of this consolidation in general, because at that point you would understand why all these highs are protected, and why it would be more beneficial for you to take short setups instead of, or rather than, identifying long setups, at least in this specific scenario. Thank you guys for tuning in. I do appreciate all the love and support. We very much went over a bearish W, natural W, as well as bullish W, the market structure, price action, as well as, implementing trend lines as well to identify your overall range, or I should say setup. I am very well grateful to be well on our way to 1,000 subscribers. I do appreciate all the love and support. Share this video to, any kind of trader that's looking for a different approach, looking to identify or at least really enhance their retinal activating system, really kind of understand what they're actually paying attention to as far as the market structure that may or may not be presenting itself, right? These are just different variations between each of, the expansions within the market acting as, maybe a correction, expansion, correction, expansion, correction, expansion. It's really just, again, understanding price action as well as market structure at a mastery level, implementing all as far as, your well-equipped experience as well as repertoire to understand your overall range as well as biases within the market. I do appreciate every single one of you for tuning into this series of pattern recognition, where we went over bearish as well as bullish variations, being, obviously M's as well as W's. I hope this gives you a pretty decent understanding on how to identify patterns within the market, how to definitely trade within the markets, at least at a novice or a beginner level, for those who are looking to obviously learn how to trade, but definitely don't have it so much altogether to where you can just very much just trade ranges. It's going to take time. However, understand that within every single one of these, I guess you could say impulses are very much ranges, including the counter trend, right? So again, this is just understanding that the whole thing of itself is a correction leading to an overall expansion. Correction leading to an overall expansion. Correction leading to an overall expansion, So it's not so, just so it's not so confusing and or downright ambiguous, just to, simplify what, overall to expect within these markets as far as, obviously pattern recognition. There will be very much more videos on pattern recognition. This is just a two-part series. I might add on to this series. I don't necessarily know too much right now, only because, I very much am focused on ranges, range-based trading, as well as, rule-based trading